Good morning, everybody. We've got a little bounce going on here from support to the left. Makes total sense. How far will it get? Good morning, everybody. Oh, well, I forgot to do that every morning with this Internet Explorer that has to be turned off. So, well, bounce intraday, obviously going on overnight here. Whether it'll be something of significance is another story. This breakdown area is going to be a significant reference point to get above. We've got the 20 MA there, which is subjective, and it's just a line that we put on our chart. We could jiggle that around by changing the parameters or the type of moving average. However, it's lined up with a breakdown area where it tried to hold. That makes it significant as a reference point confirmed by price. And as we look to the left, we see this congestion area right there. And so, as always, we like to do little lessons here pre-market as well as in the green room as to MTS strategies. So what's happened now, how we interpret this chart is this section here. Right? This section is now irrelevant. Why? Because it's been neutralized as a reference point. It's been traded above and below. And how is that helpful? Well, how we all tend to look at things at the beginning is like, well, look at this huge area over here. And if you use something like market profile, where it's looking back, whatever, how many days, maybe 5 days or so, what you find is that, and I can throw one on here, the point of control, as it's called, which is a market profile, is basically like let's just call it like a bell curve, right? And the point of control is where the majority of trading occurred. There's different ways of looking at that. You can just look at the volume. You could look at a volume profile. You could look at a market profile. In essence, it all comes down to where a whole bunch of trading occurred, which you can see these overlapping bars here and these overlapping bars over here. So all of these more complicated indicators interpret what you could interpret by simply looking to the left. Now, from that, the understanding of what neutralizes what's beyond what's directly to the left is an important concept. And we do that by saying, well, if something has been used as a reference point, traded above, traded back down to it, it traded below it, it's been neutralized. And I came up with that because time and time again, I'd be looking at something from this point of view and say, like, it's not going to be possible to get through all of that. And I'd see prices up through it like it wasn't there. And it's like, okay, what is the common denominator here? This was it. And this isn't to suggest that this will go through here today. It's just to give an objective measurement of what we need to pay attention to, which still comes down to the same area right in here where this red line is, that it's got to get through to get into the void up above. Okay. And can it do that? None of us know. And today's trading day is happening with the contents of this moving down. We've had some crazy price action here over the last couple of months. I don't discount the possibility of going up there, but it's got to get through this pretty significant area first. And if it can do that, if it can close in there, well, then that opens up the possibility of possibly getting up into here. Step by step, let's clean up my scribbles. So at the moment, we see prices have made a new low on slowing momentum and started this move back up into this little minor void. And as it's coming up, we now see momentum is slowing down. We don't need indicators for that. Just look at the distance between lows, the distance between highs after you get a minor reversal, and it tells you that momentum is slowing down. It does not tell you that the trend has changed. It's just one piece of information. Momentum is slowing down. Okay, now what do you do with that? Well, I see a wide range bar here. It's consolidating. Wide range bar starts coming up, starts creating a thought. Could this bounce from there? And then from there, what I do is I come down to this time frame and then start looking for patterns to trade. So based on today, we'll see now that this momentum is slowing down, which you can see this little break here. Just head back down today. Where's this today going to end up? We do have some support that has been created down here. We'll see if that holds, whether it jiggles around before coming back up again. And from a longer perspective, as mentioned yesterday, all we have is a trading range going on here. So before we get into bear markets and market crashes and all of that nonsense, right now, this market is going through a whippy consolidation after a nice move up from this pullback within an uptrend on the weekly time frame. It's messy. It'll clean up when? Maybe into the new year. We'll see after the holiday. All right. I don't know, George, if it's stage 3. So stage 3 is something that we talked about, back years ago, as far as stage 3 within an uptrend is where prices become erratic, wide and whippy before a change in trend. Now, it may be. It may be. We don't know. But again, what does that mean in the perspective of big picture? If this breaks down further on the daily time frame and comes down to the 200 MA, does that mean we're in a bear market? Hell no. That means we're in a larger correction. It's a wide whippy correction. And if this breaks down, it's going to be similar to what I talked about here, in that what we're going to deal with now, as this comes down through here, is going to be this area here. So if this is a stage 3, a topping pattern, in reality, what we want to see is this attempt to turn up, come up here and fall like a bag of rocks off a roof and come down here and create this price void over here. Because as our market internals would certainly be extended at that point, we then start watching for bottoming patterns. Now, it would leave a top up here, granted, but coming down here at least would present us with an opportunity to trade what could be a sizable bounce. And, so we'll take it from there and see what's happening as far as interest rates, which is something interesting is happening right here today, which I just typed into the green room there, and that I see what's happening over here. And I'm like, 70% change. And I see 13-week, which is basically the three-month rates, making a major move here. So the other day I said, this is kind of strange that this is moving down. And the Fed chair is saying, hey, we're going to raise interest rates next year, probably 3 times. And this is moving down. It's like, something is out of sync here. And now we see this move up here. This is in alignment with what he said. So what does this mean? Well, I can't say for sure, but this Omicron, and depending on who you listen to, on the news, if it's the politicians, we're all going to die again, right? Lockdown, get under the covers and all of that. I put a link in the room the other day of the fellow who created the technology for viruses is saying, this thing isn't such a big deal. So anyway, as far as technicals go, this moving down as interest rates are moving down is more like, hey, we're afraid of this lockdown thing. Everything's going to come to a screeching halt again. Things slow down. So interest rates aren't going to go up. Now they're gapping up. And this is up here like this and more in alignment with, things are probably going to be okay. We need to control inflation. So yeah, markets now believe the Fed will raise interest rates, sometime at the beginning of next year for the first time. Now this makes sense. And with that, we continue to keep an eye on other, um, you know, how far we go out in interest rates, 5-year, 10-year, 30-year. And as this evolves into next year, we'll be talking more about yield curves and if this begins to contract. And part of the problem earlier in the year was this was moving up in such a fast rate. So you had this shorter duration moving up rapidly while, there's the 30-year is just kind of sitting here moving up a little, going down. And these yields are coming closer to each other, which they're not anywhere near there yet, but they're closer to an inversion between long and short-term yields. If that happens, recession is ahead, right? How many months? I don't know. We'll see as things evolve. We'll see many other things begin to deteriorate. But right now, seeing the 30-year moving up, it's in a downtrend now. And for today, it's a good sign, right? To see this moving up. So let's see if it continues to move up, how far it can move up. Same way we look at anything else, look to the left. It's at resistance right here. We'll see if it stalls, whether it can keep going up. The further it goes up, the more we will, goes up at a faster rate, hopefully. This is moving up pretty fast, but this will be better for financials, which, we'll take a look and see how those financials, which were looking pretty ugly yesterday, do they begin to stabilize? This is the intermarket analysis part of what we do as independent professional investors and traders. And while some of this is more skewed to investing in long-term on a day-to-day basis, it certainly can have an effect as well. It depends on what the markets are focused on. So I have seen times where interest rate movement on a 1-minute chart would affect what's happening in the S&Ps. And things evolve, and all of a sudden, the markets could care less about what's happening with interest rates on such a minor time frame. So, things change, as we all know. All right, markets now, S&Ps just inside day, just running in place, coming up to resistance. NASDAQ futures, down here at support. Come down, look to the left, bouncing up here. Bounce of any significance? No, not yet. All right, up against first resistance, momentum is slowing. We'll see what happens. Russell beaten down. All right, we've talked quite a bit about the year-long consolidation, the big breakout, the big failure. Can it begin to repair the damage and start to move up from here? So as we look at interest rates and different parts of the market, a breakdown in these small caps would not be a good, they've already broken down, right? But I mean, a further breakdown under this consolidation would be a bad sign. And if you then look at, retailing, it moved the same way, and they've broken down. So, this market is going to go through, it is going through a corrective process here with this wide whippy ranges. How ugly does it get? What point does it begin to stabilize? We'll figure that out as it evolves. We're not into predicting that, a month from now on Thursday, the market's going to turn around. As far as those rallying, McGraw, well, yeah. So look, we have these seasonality things, the Santa Claus rally, right? Santa Claus got, a bunch of coal for everybody this year. It was like, after Thanksgiving, there was some extra stuffing left over and all of that. But, January effect for small caps, they're beaten down. So why not? Even if they can move up into the moving averages, sure. They're down here. Well, this is IRX, but same story. They should move up as well. The small caps are jiggling around here. Is this a breakdown failure? I don't know. We've got yet to see, but They've broken down. There's congestion here. We don't really have a void. We don't have great patterns here. Let's just put it like that. We don't have great setups, but maybe things can move up. YM, came down real hard. Similar pattern to what we're seeing. A lot of times, well, we see markets that move in unison, and we've seen plenty of times where these markets are totally detached, meaning Qs are going up, Dow's going down, Russell's doing something else, and now we see they're kind of all trading in a similar way with these similar patterns. Silver, we talked about this potential breakdown bar failure over here, and it went lower, and we talked about, hey, a secondary one, and it's popped back up. So this is looking good. I like it with this bottoming tail bar. At this bottoming tail bar on the weekly, this should be able to go higher. Gold consolidating, like it's getting ready for a move. Wide range bar, pulling back here a little bit. Maybe trading above a prior bar's high would be an entry. Oil, up here a little bit. So everything's acting pretty well here, this morning for some kind of it's already had a bounce. We'll see how far it goes. Bitcoin's up as well. Came down to that pivot there and it's bouncing back up. It'd be good if it can close back above this level. Since of the way it came down, going sideways here. And now, should that happen, say today closes green, our bar by bar analysis, hey, red bar ignored, bottoming tails, which were red bars breaking down that came back up. Bitcoin is finding buyers, good demand. So let's see if we can get a completed green bar here by the end of the day. Transports, right? And they gap down below, close below the 200. Can they get back up above? So just the takeaway today is we're getting some kind of a technical bounce. We'll see how far it goes or the lack thereof. And this corrective process is no means over. We'll see how far it goes into the holiday. All yours, Dan.
Good morning. Yeah, it's funny, if I watch the news just pre-market and then I flip over to my music the rest of the day just to see what the talking heads, what the theme is. And today, nobody can explain this big old gap up. There we go. Just a bounce, I guess, if I had to say, or if they had to say something just to fill in the sentence. Because I always say XYZ is up on blank. Up on what? What, they want to put in a news event. And I guess today the only, reason would be overreaction to Omicron again. I don't know. But yesterday, a lot of our trades in the weekend letter, well, not a lot, a couple, even in the market weakness triggered. And we went through in the green room in the afternoon, all the other ones, and we had a little group exercise and we went through them all and we said, do we delete it or leave it alone? And amazingly, we kept a lot of them, leave them alone. And here's one right here, Hyatt. If that triggers over Friday's high, then it's fine. There was a lot of bullish inside days. Look at T-Doc. Look at that. That looks fantastic. I'm going to put that in a window over here. What else? There's a couple others like that, but CCL. Oh, and even the news guy was talking about that with Kramer or whatever the guy's name is. He's like, hey, what why were some of these travel stocks rallying yesterday? And they're just scratching their head too. They don't know how. But this alarm went off yesterday morning. And I'm like, wow. This was on the news of RCL having 44 corona cases when they came back on a cruise and negated the gap. So we're technical traders and we're like, all right, take it. Oh, let's see. Google have room to fall. It's down, it's at the bottom of the trading range. It would have to take out yesterday's low to have a short bias. And let's see, somebody's asking to pull the spider chart back up though. PB duck, but I don't see what your question is. It's gapping right here to gap fill. So I have absolutely no bias right now. That's support below, resistance above, gap and resistance. But the Qs actually are breaking down a little bit here pre-market. Let's go through some things of interest here. Not too many earnings. Nike here, this is a buy setup near the 200, gapping up on earnings. Let's see, 164 and change. It's a big gap, but it still has room. Let's keep an eye on that. I have it on the bottom right here for intraday entry. MU gapping up 89 and change, top of the range. Wow. Wow, that's gapping. That's a big gap to the very almost penny to the top of this range. I really don't have any desire way up here, but on a pullback also. I'll put that in a different window. Yeah, I know. And so did Nike. Sava here is a bio. I saw it gapping up. I saw it see at 56 this morning. It's come in a little bit, but you know, that's a beautiful downside shakeout now. So that's worth watching. I'm seeing a crypto bouncing a bit here. We were looking at this. This is the ETF. We'll watch that on a pullback, and then we obviously want to look at Bitcoin stocks. 24. There's no pattern here. It's in a downtrend. You got an ugly reversal there on Riot. MAR is the same. Mister, we actually are short way out of the money puts for expired Thursday. I think we're short the 450s or something ridiculous like that. So that looks fine. Looks beautiful. PPSI rocking here pre-market. Looks like a day trader toy to me. Greg, Saba. No, not Saba. Where's the one yesterday? Where's that one they traded? SOPA. Look at SOPA. So strong, gapping up $1. That thing still looks higher. This is my girlfriend, Jessica Alba. Her company is not off to a good start. Wow. That is an ugly downtrend on the honest company, gapping up to 8. Could it be the start of a bottoming process? Possibly, but that's not good enough to interest me. Pelletier, it's kind of, it's not a textbook 1, 2, 3. Nevertheless, it's in a power downtrend. Green bar is ignored. If it trades under, today's Tuesday, if it trades under Friday's low, and then that poor thing looks lower. Let's see, this little pivot, 1792. I'm going to set an alarm there. And remember, Friday's a holiday, so we have expiration. Obviously, it's Thursday. Today we have option coaching also, don't forget. All right, now this is a nice retest, rad. I don't know what it's pretty darn volatile pre-market here. You know, 1150 to 1350, that's a huge range. But obviously something's up there and you got to retest. So I'm going to put that in a window. Breeze, I think, was earnings. Look at that beautiful retest of an IPO. Now the gap's too big for me, but that's a beautiful retest pattern. Yesterday's high would have been a good place to get long. Well, I don't know about long term, but to get an entry. There's some activity in these solars, and that's a bearish gap. And run we were talking about yesterday with the $10 gap down, but nah, those are not compelling gaps. ENPH. APOG had earnings. I don't see any gap though. Trading range. I think this was earnings too, but I see nothing. We'll come back to you. FDS 452. All right, this could be a topping pattern. There you go. 30-minute low. 30-minute low, that looks good. FDS. EPAC, no pattern. MU, we looked at just 64. It's getting smacked at right back down to here. So this entire advance is going to be an ugly tail on the weekly. But there's no pattern. XBI, we said yesterday we like it over yesterday's high. Really? Well, what's up with that? 3 to 750. XPH, we said potential bottoming pattern. So now it's gapping up. So it's still worth watching. Wow, ticked 1,500. And yesterday it was negative 1,500. Cubes are breaking out. We found this one yesterday. 30-minute high. I was hoping 30-minute high would be closer to 56 instead of a higher high, higher low bar, but that still looks good. All right, TDOC is red, which I actually like. Let it just go sideways up here. Zoom, we were watching for a put spread. DWAC, old Trump, nothing. I've been watching this GPS ever since the gap down. And look, now it's gapping up from a bottoming pattern, a retest, W bottom. So it looks better now. Looks good. Today might be the day, Greg. We were looking at it yesterday. Wow, we were looking at it to post it over the highs. But it's over the highs now. That's worth watching. Yeah. Yeah, it's just Joe, I don't like when they run pre-market like this and then